Hi, Tori Agler with McIlvaney Precious Metals with your April update. As always, we're grateful for your trust in business. I want to share the screen here so I can go into a little more detail with you on what transpired this month and what we're seeing. This is important here. This is the run in gold. And so you see this spike just here in April. And even though it only finished up 3.3% in the month, it actually had about a 9% rally. And we'll take that. The reason that we drew this out and showing you that $2,425 mark is because we have pulled back since then. And so these are key numbers. I'll get more into that later. And it's important for you to see that what we're trying to do is guess on where we might pull back to. So this was another indication of that move. And this is a shorter term chart. So it matters where you start and draw that chart out. And that helps us to determine what those next support levels will be, and we'll come back to that. I'm going to remind you briefly of what's happening and why this is transpiring, and that is the decrease in purchasing power of the US dollar. This image does a good job of just all we're doing is maintaining purchasing power as the currency depletes. So it's not a great return, but other than that, it's directly correlated with the money supply. So laying this chart over the money supply is really important because it tells you and shows you why gold is doing what it's doing. The more dollars in circulation globally, the higher the gold price is going to continue to go, and there's really no interruption to that trend in our lifetime. We'll see what transpires. This shows the opposite or inverse relationship between gold and the US dollar. The green is the dollar index strength, the black is the gold. You'll see how high gold has run here. And in this most recent spike, it's actually corresponded very rarely with a spike in the US dollar index. So that tells me that this is geopolitical in nature. Geopolitics, however, are not a strong underlying fundamental for gold for the long term. It'll cause spikes, but it's not going to carry it a whole lot longer. All right, here's an indication of gold versus the S&P. So when your friends say, hey, gold doesn't do anything, you can show them that gold actually goes up the same pace here over the last 27 years. You can do this for 20 years, 25 years, 50 years, and gold has either kept pace with the S&P or it's outperformed. So be encouraged with this recent price action and the annualized returns, but let's keep a focus on the underlying fundamentals. One more chart is how gold has kept pace with real estate. So those of you that are real estate investors or think that real estate just goes up over time, it is true. So does your gold with a lot less maintenance and headache. So what's happened here in the last 17 months? Look at this 50% move in gold. This is a really aggressive chart, a real aggressive move just in a little under a year and a half. Not the norm, certainly, but we'll take it. That's unfortunately a strong indication of what's been going on economically, monetarily, fiscally, and geopolitically. Here, however, looking back to December 2015, when we hit that bottom, gold's actually up 130% in that period of time. And that's important too, because people ask, is gold getting exhausted? Can it go any higher? Is it too high to buy it here? Absolutely not. Silver's done the same thing, and we're hitting our head here right around the $30 mark. As you'll see, this goes back a few years. That's going to be a really tough barrier to cross. So we're looking to come back and touch that 30, and we think this is the time, this is the cycle in the next year where we're going to break through 30 on our way to 32 and then 35. But here's why I'm thankful for a pullback, and I'm actually optimistic for it to come down a little further, and that is the fact that we are so far separated from the moving averages. You see, when we got over that 2,300 mark, I mean, we ended up going higher than that, but look at the 50-day, 100-day, and 200-day moving averages are way down here. And if you go back through the charts, you'll see that eventually you always come down and touch those moving averages. Silver is the same. Look at this separation from silver as it got up. Again, it went almost to 30, but here at 28.50, it shows that separation. Now, as I record, we're at $26.70. So we've come down about halfway, and there's a real chance that as these averages move up and the price comes down, at some point they'll touch, and then they will form a new base and be a really good opportunity to take off. Here's another indication. Every time we had these strong bull runs in gold, like this green run here, is followed by an extended few-month pullback. Same thing, you'll see these tops every time, a couple months in green, followed by a few months in red, few months in green, right? Well, that's what we've had here, a little bit of a pullback. This is a really strong run, but we've had this big spike here. And to me, that just means that we're due for a little bit of a summer lull, if you will, which is a typical seasonal trend. Looking at the entire potential gold move here, this is a chart that we sent out at the beginning of the month that said, look, if we were to guess, we think we're going to go to 2,337. We obviously went higher than that, but we're pleased to have seen that we filled that gap. And now that 2,080 level, or this old level, can be a floor. And here's the other indication of why we feel strong about the fact that gold's not overbought. Okay, is look at these trends where gold really runs up in 2022 into 2023. It takes a breather, and then in 2023 into 2024, we have this other spike just before 2024, takes a breather. What's not included here is the most recent spike up to 2,400. So you get this 2 steps up, 1 step back in a bull market. Nothing has changed fundamentally. We're still there. Going back even further, you'll see these times where gold, back here in the 70s, it tripled, then it goes up 8-fold. Getting to 2000, gold tripled, it goes up 4-fold. Now we've had a gold double, and what we're looking for now is just a much more aggressive run at some point after a breather. 3,000 is only a 23% increase, $3,000 gold. $4,000 gold is only a 60% increase. That's nothing compared to those earlier charts I showed you on what gold can do over the long term. What has the gold to silver ratio done? Trust us, we're watching that. We're getting this compression right here in the 85-to-1 range. We've gone from 83 to 87, and so that's what we're really hoping to see is a breakout into one of these other channels, and then we'll be able to make a move on that. In the compounding out strategy, you need to be aware too that a lot of times we're looking at premiums. So here's the junk silver premium, and we just weathered the storm over a couple of years of really high premiums, and that premium has now come back down to essentially the same price as 1,000-ounce bars. So any of you that own 1,000-ounce silver bars, give me a call and we can talk about strategically placing into some junk silver potentially. Now, interest rates, the Fed came out today. They're not cutting, they're not raising. That's good news, big news, unexpected news in some aspects, very expected on our part that we didn't think that they would change anything. All that to be said, look at what's normal. Here we are in this 5.25% to 5.5% Fed lending rate. That's normal. Go back through U.S. history here, just in, since our company started back in the 70s. You'll see that it's not abnormal. What's abnormal is for those rates to be artificially low. They need to raise them so that when a crisis hits, then they can cut rates. They shouldn't be cutting rates here with inflation too hot. So I would tell you, get used to higher rates for longer. And in fact, here are the odds of a rate cut, and so we really don't see any of that. So July is the red line. There's less than a 50% expectation for them to even cut rates in July. And then the yellow is September. It's just barely over at 57%. So again, I would not count on any rate cuts. And then obviously stay focused on these underlying fundamentals, right? All of these push and pull on the gold price. Okay, so take a screenshot of this image, because then you can ask yourself, why is gold up today? Why is gold down? Why is it not doing what I think it should be doing? All of these underlying fundamentals are lining up, however, right now to be very bullish. And you can call me and we can run through that. Please don't hesitate to reach out to me so that we can talk about your individual portfolio. Speak with Deanna to get something set up, consultation time, set some time with Eric to talk about retirement accounts, opening storage accounts, that sort of thing. Again, we're honored to work with you. As always, we greatly appreciate the opportunity to do so. And the number here, 866-211-8972. And here's to a great May.